Welcome to today's Market Snapshot. My name is Craig Erlam, Senior Market Analyst at OANDA. Once again today we are seeing a lot of risk aversion in the markets, really continuing exactly what we had on Monday. We're seeing equity markets in Europe between 1 and 2% lower as we head into the close. We are also seeing US as well trading about 2/3 of a percentage point lower. Of course, really the focus at the moment is on the UK. It's on the UK referendum, potential for Brexit, and clearly the implications here are seen as having a far bigger impact on Europe, which is why I think Europe really is leading the way in terms of these losses. The FTSE this morning breaking through that key 6,000 support level, potentially signalling much more bearishness to come, and a very bearish investor. Like we've seen the FTSE's actually held up relatively well up until about a week ago, potentially signalling a bit of complacency in the markets around the potential for a Brexit. And it's only since the betting odds started to move in favour of the Leave campaign that we have started to see these significant moves in the markets. Like I say, it's not just the FTSE, it's in the pound as well. The pound, we've seen some significant declines over the last week, dropping from around 147 back to around 141 now. It looks like we could potentially see further declines to come. Like I say, it's all along the same lines as what we saw yesterday. We've had a number of other polls now out over the past day or two, which have really piled the pressure now on these instruments. We've had some more polls. We've had the Brexit probabilities fall to just 59% for Remain, according to the FT, the ORB poll, the YouGov poll, the ICM Brexit poll, all showing now in favour of Leave by varying amounts of points, ranging from a couple to around 4 or 5 points. So clearly there is momentum now within the Leave campaign, and this is what's really spooking investors right now. Like I say, it's gone from the potential for a Brexit being very minimal to actually being a very real possibility. Now, it's worth noting though that the betting odds still do, and they are the more reliable, do still show around a 59-60% chance of the UK voting to Remain. But like I say, compared to what it was a week ago, that is a significant change, and with just over a week to go, momentum very clearly with the Leave campaign as we speak. In terms of today's key events though, I think really what we're looking at is some economic data from the UK and the US. We've got CPI data from the UK, which was slightly worse than expected, but given what we've got dealing with in the UK right now, it's not really too much surprise to see that easing off. An economic slowdown of sorts was to be expected in the lead up to the referendum, and that is typically going to be felt in the inflation figures as well as the growth figures. Really, when we're looking beyond this referendum though, these figures in my view are pretty meaningless. If we do leave the UK, if we do leave the EU, then the impact that has on the currency will have a much bigger impact on the inflation rate data in the months to come, which makes this irrelevant. If we vote to stay, then I think that's going to have a bigger impact as well. If we do see a rally in the pound, for example, albeit potentially not the type of move that we'd see to the downside if we left, that could potentially push downward pressure on the inflation data in the same way that decline in the pound could lead to higher inflation further down the road. The US data was interesting. Retail sales actually beating expectations, a second strong month of consumer spending. I think that's very interesting. That just shows that this one jobs report people have got way too carried away with. I still don't believe that the Fed will raise interest rates tomorrow. 2 weeks ago, I was potentially open to the idea that we could see a rate hike tomorrow. In fact, I would have said that I think we should, that the Fed should. But given what's happened in the UK, the change in the polls, I think the Fed is going to opt on the side of caution, and I think the jobs report as well for May actually just gives them an excuse to hold off for one more month without putting too much emphasis on the Brexit vote, even though I do believe that is going to be the main reasoning behind holding off for another month. But again, strong retail sales figure does therefore potentially bode well for a rate hike at the meeting in July. We've still got API weekly crude oil stocks to come later on this evening. Oil trading back below $50 a barrel at this moment in time, really struggling to gain that upward momentum despite breaking through that $50, potentially being weighed down by some strength in the dollar, which is up by around 0.5% today. But I do also think it signals a potential topping in oil. We've now had 2 consecutive weeks where the oil rig count from Baker Hughes on Friday evening has risen albeit only by a few rigs, but that is a change, potentially signalling a change of trend, which could coincide with a topping in oil prices. Right now, if we get a rise in oil stocks, or at least a smaller decline, then that could potentially feed into that belief as well. Like I say, that's all we've really got for today. The focus now is going to be on the Federal Reserve tomorrow. We've also got the Bank of England Thursday and the Bank of Japan tomorrow evening, Thursday morning to come as well. So still plenty to come this week, although the key focus still again is going to remain on Brexit polls, and also the betting odds I think is going to be the key drivers of the markets going forward. Of course, we've still got a number of debates to come as well, so focus very much remaining on Brexit at the moment. For more in-depth news and analysis, check out OANDA Market Pulse at marketpulse.com. You can also find out more about OANDA and sign up for a free demo account at oanda.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.